Hi everyone, my name is Eti-Osa, and today I'm going to be presenting the SCOPIUS Risk platform to you. Basically, the platform is about making sure that capital providers, that is insurance, banks, fund managers, and any other capital providers have the necessary financial picture of a project. When a project developer comes to them and gives them a project case, that they have a way to tell all the scenarios of that particular project, not just the opportunistic case, but all the scenarios for different risk dimensions. So this could be, of course, depending on the project location, the project type, the sector that project is in. And I'm going to show you a demonstration of that with a case study project, the Eti-Osa Lagos project, which is a wastewater treatment project in Lagos. The data that I'm going to show you is actually simulated because some of the data is publicly available, but most of what we're going to be seeing is proprietary information, so that is simulated. But for the publicly available data, that is incorporated. So yeah, welcome. And this is the demo. This is the Eti-Osa Lagos Island project. The first thing that the tool does is actually to ask for inputs from the project developer, but I'll show that maybe in another forum. And immediately after that, it's going to validate the base case, which is to check the information that has been given by the project developer. So for instance, anything about population, anything about location, it will verify from such sources as World Pop or the Global Human Settlement Layer, or if it's a solar project, it's going to look at the Solar Atlas and other credible data sources, 2 or 3 corroborating sources, so that you can make sure that the case is within a reasonable bound. So as you can see, this is the inputs. This is the project where it is. This is the project asset. Again, this is a water and waste treatment plant. And then this is the service area. So you can see it's within Lagos Island and also Eti-Osa. That is basically the service coverage area. You can see this is the demand area, and you can see this is the site. And of course, we have the project inputs here, the project name, the country, Nigeria, Lagos, the project area, Eti-Osa in Lagos Island, the implementation start, the commercial operation date, and the site boundary, which you've already seen here. The capacity of the plant capacity of the plant, the target population, capex, debt ratio, minimum debt service coverage ratio, and availability payment. And then, of course, you can look at the demand and commercial case, the service market, the base population, the service area, how much area it's serving. This is about a 53-kilometer radius. That's like from Nairobi to Thika. So a radius of that area, that's where the water waste treatment plant is going to be serving. Then, of course, the business model is there's going to be a monthly household tariff of $12 per month, a connection fee of $50, and then we're going to have an availability fee paid by the government on $20 million per year. So that is basically the business case for this project. You have an availability fee paid by the government or paid by the public, a connection fee for each connection that is made, and then a monthly household tariff of $12 per month. For the climate hazard, you have a design protection of any hazard of a return period of 100 years. Particularly for this case, you'll have floods. And then, of course, as you can see, the design protection is for 100 years, and the protected components are all the components. Residual damage is 0. So that is all of the inputs. Then you can come here to the run. So there are some of the inputs that I haven't shown here, but they are basically in the back end, where you have the component registry for this water and waste treatment plant. What are the components that are going to be there? What are their manufacturing sheets, so that you can understand the ratings in terms of flood or heat stress. What is the rating for that? Those are all in the back end. So you come here to the run, and you can basically run the case study, and you can even change the design protection. So you can have no protection case for climate change. You can have a protection case of a weak protection case of RP50, a modest protection case of RP100, and an enhanced resilience case of RP500. So in this case, we're just going to go with this RP100, and I can run the case study again, but I had already run it. So you'll be able to see the outputs in this climate dimension. For now, we're going to be doing the climate and demand dimension. So if you see here in the climate dimension, you have 4 scenarios. You have the no climate impact. You have the current climate, basically the current trajectory as it exists, without any transition based on the SSPs. Then the downside climate risk is actually the SSP2, which is the middle of the road scenario, and then the severe climate case is SSP5, which is the fossil fuel driven economy. So you can see the expected annual damage, particularly for the no climate case, is just $0. Sorry, is $0. You can see the downtime is 0 days. You can see the net present value of the project is $131 million. The projected IRR is that, and etc. You can see if you now introduce climate modeling just as is without any SSP transition, then the NPV goes down, and here's the NPV change. You can see for the SSP2 scenario, the NPV goes down even a bit more, and for the SSP5, which is the severe scenario, it goes down by quite some margin. You can be able to see all of this here, the expected annual damage in terms of the dollar values, the expected annual downtime in terms of the days per year, the project IRR, and all of that for all the 4 cases, the NPV changes and the deltas. And then if you go down, you can actually see how the expected annual damage was calculated, which is the hazard times the exposure times the vulnerability. These are the hazard curves for the 3 scenarios. You have the current, you have the SSP2 scenario, and you have the SSP5 scenario. So this is the hazard. It's just a flood hazard and this data we got it from Aqueduct. Then you have the exposure data, which you can simply get from the manufacturer sheets of all of the components that are required for the treatment plant. Then you have the vulnerability curves, again in the manufacturer sheets. With this information, EAD can be calculated by hazard times exposure times vulnerability, and you can get the expected annual damage. And then you can use that to inform the financial picture of the project across these different scenarios, which are these ones again. Then we can move on to the demand dimension, which also has 4 scenarios. You have the base case for the project, similar to the climate case. You can see it's the same. So this is without any demand modeling. Then you have demand upside. Demand upside is basically if you have more uptake in terms of the participation and service connection. Basically, you have more ramping. Then you're going to have a larger NPV, and you're going to have a positive NPV change. But the downside, you're going to have, of course, a negative NPV change. And if you're going to have the severe case, you're also going to have a larger delta, much larger delta. So you can see that as well here in the demand table, the case study for basically the project case, the demand upside, the demand downside, and the demand severe side. So you can see all of these scenarios. And if you'd want, you can also check the definitions for all of the scenarios. So I'll just zoom in here. Basically what we're looking at is the population, the network coverage. Then you want to look at the subset that is actually going to participate using surveys. Then the households that are going to be connected, the accepted treatment load, and the revenue. Finally, you have the artifacts here, which give you all of the data. And then you have the cascade engine at the very end, which is basically going to combine the climate and the demand scenarios to give you a holistic picture of, what are the financials of the project if you take into account the climate and the demand dimensions of risk. So that is still under construction, and happy to engage with people and also demonstrate that on a live demo. Happy to show you guys. You can also see here the forms that we use to add projects for project developers or for insurers who are actually onboarding the project to do a risk assessment. This is the form here. It has all of the information that you need to collect. And then, of course, in this day and age, you also have an agent that can help you quickly do that analysis, quickly onboard your project, or quickly onboard a developer's project. You want to understand the size of the opportunity as an investor. You want to understand if the investor or if the developer is selling you a very optimistic case, whether they've considered all of the dimensions or not. We are looking to add more dimensions, obviously, the political and regulatory risk, credit risk, macro, foreign exchange risk, and security and conflict risk. And yeah, that's it. Please reach out to us if you would like to see more on the platform, or if you'd like to contribute to the development of the platform.